Good day everybody, so Guy here, the unknown, and guys, I missed you. I haven't been recording for some time because my voice wasn't coming out well. I wasn't that much okay, but now I'm back, and I still believe that even though I wasn't recording for quite some time, you were actually able to trade without any trouble because you know exactly what we are looking for, and you know we're taking the same trade each and every day, and this is the easiest way of trading because we know exactly what we are looking for. You have all the information in the playbook, you have all the information on the videos, okay, all the criteria, you have them. So guys, without any further ado, let's jump into it. This is still the most explosive trading strategy for indices. It's quick, okay? That's why I love it. And I also love the fact that throughout the day we are doing nothing. We're only coming to our chart during the US session. You are there, the opportunity is given, 50 pips taken, then you're out of your chart. You can continue with your day, okay? So guys, here are the criteria. We identify trade volume before the session, and then we wait for the equity opening time, and then we want to see trade volume during the session. I'll explain everything as we are proceeding. And then we want to see the engulfing candle, which is the evidence candle. It's the candle that engulfs the pattern, okay? And we target 50 pips. And then of course it's important to ask yourself what kind of trend. Sometimes you will be able to identify the trend before the session opens, like in the case of an explosive trend and stuff, okay? So if you can identify, it's important because that will give you a clue on what kind of trend you are in, okay? And then you can actually take in line with the trend. So everything is in the playbook. I've drawn all the different kind of trends in the playbook. Everything is there, guys, and even here on the video everything is here, okay? So now we're gonna go to a 5-minute time frame. As you can see, I'm on S&P 500. I'm gonna go to a 5-minute time frame, and I do this 5 to 10 minutes before the session opens. So here I just choose the 5 minute or the 15 minutes because I can see the entire day, okay? So one thing I'm gonna do is I'm gonna try to identify trade volume before the session, and the reason I do that is because most of the time they're not gonna release this, guys. So if they're giving us an opportunity into trade volume, we want to be aware just to avoid instances where we will be in a profitable trade and they will come back and eat all our profits simply because we traded into trade volume. If you don't have enough space, okay, for 50 pips, obviously we want to avoid that trend up until the time they have broken up or the time when they are reversing, okay, because we know that most of the time they're not going to release those who are trapped, okay? So as you can see on this day, okay, what they did is their session actually opened in the middle, and we want to avoid the candle that opens the session on a 1-minute time frame. I'll explain why. As you can see, this session is opening in the middle, so we can't tell who is trapped because there are people who have been sent up and there are people who have been sent down, so we can't tell who's trapped. So we still proceed with this, okay? However, the following criteria are a prerequisite of the next one. We don't proceed if the previous one is not met, okay, except of the first criteria where we identify trade volume before the session, okay? So now, since we couldn't identify, we're going to wait for the session to open. And when the session opens immediately, one thing you'll realize is that the candle that opens the session is actually going to be the biggest candle, and most of the time it's going to be a stop hunt. Hence why I always try to avoid this candle, okay? So look at this, guys. Every day I told you, you must compare your indices, the NASDAQ, the S&P, and the Dow. Open them on your computer, like you can use this one, and then you can just split the screens, okay, and take the easiest trade on the day. Take the easiest pattern, take the cleanest pattern on the day, okay? Choose the cleanest pattern. If it's not the cleanest pattern, don't take it. So you can see here, when we look at the Dow, you can see we didn't really get a clean pattern, okay? We didn't get a clean pattern, okay? Okay, we didn't really get a clean pattern. So I'm gonna go to NASDAQ because on this day I took the NASDAQ, and I just want to show you why, okay? Remember, we are comparing them at the same time, and we are taking the easiest one. So again, with NASDAQ, I'm gonna go and actually identify trade volume before the session. So you can see, okay, we have these guys over here, okay, these guys over here. These are the guys who are trapped before the session is opening, okay? These are the guys who have been sent up, and right before the session opens, they just went down, okay? So you can see these guys up here are literally trapped, okay? So let's go to a 1-minute time frame. 1-minute time frame, okay? So when we are on a 1-minute time frame, one thing we can see is we can see, obviously, okay, obviously you can see what they've been doing. This is what they've been doing, okay, right before the session. Sometimes the patterns will start before the session. We have seen this countless time, okay? Sometimes the trapping will start before the session and complete in the session, okay? That's the most important thing. We don't trade until the session opens, okay? So look at this. If you look at this, you'll see that, oh, they have given a right angle, a very tight right angle, and again we can see that this is something like a right angle triangle, okay? So okay, for me, I avoid this candle because it's the first candle. Most of the time it could be a stop hunt, okay? So this is the candle I avoid. and I saw that they gave a beautiful pattern, okay, before the session began. And right into the session, what did they do? They engulfed, okay, they engulfed and broke out. So this is an evidence candle, but not enough, okay. For me, it's not enough. I need to see a clean candle that breaks out of the pattern. So I took this candle over here, okay, because now this is enough evidence, and obviously my stops are inside, okay. So what do? They immediately pull back, which is still good, okay. And when they pull back like this, I don't get frightened, okay, because I know these guys down here are trapped, and if they're gonna go and close me and go down, that simply means I was completely wrong and I have room for a loss, okay. If I lose on the day, I don't have a problem with that, okay. So look at this. What did they do? They pulled back and gave another engulfing candle. So this is where I add my position, okay, and then I target 50 pips, okay. So this is very easy. Each position will target 50 pips, okay. So as you can see, 50 pips got hit, actually got hit in less than 30 minutes, okay, in less than 30 minutes, and both these trades actually delivered 50 pips if you actually look at them, okay, in less than 30 minutes, okay. So that's why I call this the most explosive trading strategy for indices. Always take the cleanest pattern on the day. Compare your indices and take the cleanest pattern on the day, okay. So one way for me is, when I see them building a pattern, what I actually do is I will set an alert. Down, because first of all, this is the low, okay. Before doing all this other nonsense that they did here, I will set an alert down here, and I will set an alert up here. So if they break to the downside, it's gonna alert me. If they break to the upside, it's gonna alert me. And the reason I do that is because I don't want to come with my own mindset saying, oh, prices have been doing this, now they have to do this. Prices have been doing this, now they have to do this. No, that's not what I want. I want to actually trade from the information generated by the market, okay, because I always want to be neutral, okay. Because maybe somebody saw that they're going down, and now they thought, oh, prices are going to keep going down. For me, I just want to see trapped volume, okay, during the session, and I want to see the evidence candle, and I want to execute. I told you 50 pips is nothing when it comes to indices, because even if I'm counter trending, I'm still gonna get paid. So one thing for me is, once I see who is trapped, I am gonna get paid, okay. I took the second candle, okay. And even if you bring in the 20 EMA, you can clearly see that the 20 EMA is in alignment with the move, okay. As you can see, you see this candle closed inside, but it's the first candle. I always want to avoid it, okay. And you can see the candle that I took was inside the EMA. Even where I added the position was inside the EMA. And of course, I knew that these guys are trapped. However, I have sufficient space for 50 pips. That's why I took it, got my 50 pips, and got out of the trade, okay. And as I always say, if you want to hold on for more pips, just open multiple position. If you are planning to take a lot size of 2, divide it into 2 trades. Take one position, and actually take 2 positions, okay. And one should take your profit at 50 pips, because obviously you want to get paid, and the other one you can leave so that it runs and runs and runs in case prices keep going up. But here I had trap volume over here, okay. So I just want to be careful, and of course I was out of my trades at 50 pips. So on this day, when we go to the S&P, because I told you it's all about comparing. If we go to a 5 minutes on S&P, one thing you will realize is S&P and NASDAQ are highly correlated, and most of the days they're going to give you the same kind of trend. You see, they've trapped on the closing price, and then they broke down, okay. They broke down. However, the most important thing for me is, okay, let me go back. The most important thing for me is trap volume. I want to see trap volume during the session. As you can see here, this is a very beautiful pattern, and the same on NASDAQ. Okay, this is a half Batman. If you are aware of a half Batman, this is a half Batman structure, okay. Go to Google, type half Batman structure or half Batman pattern. You will see what a half Batman is. It's where they make one year and then they never revisit this price. This simply tells you that everybody who went down here is literally trapped and not gonna be released anytime. Okay, everybody who went below here is trapped and not gonna be released. Okay, because obviously they're not releasing them, instead they are moving up. This is a very good pattern. Even the psychology behind it is very strong. Okay, it's very, very strong. Okay, so you just go to Google, search half Batman, you will see what I'm talking about. So even here on S&P 500, same thing happened. They gave a half Batman. Okay, they gave a half Batman. And of course, if you actually project prices, you will realize that, oh, we got something like a right angle triangle, and I told you that we want to avoid the first candle. Okay, we want to avoid the first candle. As you can see, what happened, they gave us the first candle and then they gave us a second candle, they pull back, and again they gave another engulf for another trade, for those who actually want to actually add another trade. And as you can see, as it's going up, that's when you can add another trade. Trades like this actually gives you an opportunity to actually scale in. Okay, as you can see, for me, I took the the NAS trade. Okay, but NAS and S&P will obviously behave in the same way. It's just that for the S&P 500, it's more volatile. Okay, it's more volatile. The stops might be a little bit bigger, but again, this one will hit your take profit very, very quick. Okay, so you can see they gave multiple opportunities for entries. Okay, I want to avoid the first candle. Okay, so yes, it happens. The thing is, once the session opens, you have trap volume. That's what I execute. I don't care if prices have been going down. I told you I don't want to trade based on the on my mind, on my own mindset, thinking, oh, they've been going down, or they've been going up many days. They've been going up many days. Now it's time for them to reverse. They're gonna go all the way down. No, I don't want to trade with that mindset. I want to see the pattern and I want to execute based on the pattern that I see. Okay, because once they have trapped, they are gonna punish 50 pips. 50 pips is nothing when it comes to indices. So you can see we are following actually the same criteria day in, day out, and of course we are trading into trap volume, so I want to be aware. But for me, 50 pips and then that's it. Okay, 50 pips, that's it. Okay, 50 pips, that's it. Okay, 50 pips, that's it. You see that one went all the way beyond. Okay, and since I'm taking this trade here, you can see that this kind of candle, obviously my stops must be below, but I took NASDAQ on this regard. Okay, because I want to avoid the first candle. Okay, so guys, this was a very beautiful trade, beautiful trade. So you can see on the day, comparing S&P 500, NASDAQ, and comparing the Dow, you can see the one that gave the easiest trade is obviously the Dow and NASDAQ, and this one didn't give the cleanest trade. Okay, so as I said, compare and take the easiest one. Okay, so guys, my voice is like, oh, okay. So yeah, that's the main objective. Now we're going to the following day. Okay, let's go to a 5 minute again. I just want to do 2 days for the sake of time. Okay, because I don't want my videos getting too long. Okay, so you can see when the session is opening here, they've just sent people down. This is different as compared to the day before, because the day before, you can see they send people up, and then again they send people down. As you can see, they send people down. Here's another candle before the session opens, so you can't tell who's trapped. But on this day, you can see the session opened and they just went down and down, and the session is opening here, but everybody down here is trapped. As you can see, they send people down, send people up. They didn't really send people up. Okay, they send people down. Okay, so there's a huge difference here. Okay, we can tell who is trapped in this instance. Okay, so let's wait for a pattern, a chart pattern. Okay, let's see. We're not gonna trade until the session opens. We're just gonna go to a 1 minute time frame. Okay, because obviously we can see that everybody went down, is literally trapped. Okay, so now our job is to identify is to wait for the session to open, and this is where the session opened, and now our job is to identify a pattern. Okay, as you can see, sometimes some patterns will start before the session opens. Okay, we spoke about that. Okay, if you are actually doing this, you will realize that, okay, they gave what they gave on NASDAQ the previous day. Oh, this is crazy. Yes, they gave what they gave on NASDAQ the previous day. So guys, these things are always there. Okay, and then they break out. This candle for me is not really an evidence candle. Okay, I took the second candle here, okay, on NASDAQ, because yesterday on S&P, yesterday I also took NASDAQ. Okay, I also took NASDAQ. I'll show you. So this is the candle that I took. Okay, because I'm looking at them on the same screen, okay, as they are trading, and I want the easiest one. So this one obviously is what they gave the previous day. because if we go to NASDAQ, you see this is something they gave the previous day. I told you this is a half Batman and something like a right angle triangle, okay, even though they didn't come and bounce all the way down here, okay, but you can see it's the same thing, and right at the beginning of the session they break out of it. So they did give a similar thing to what they gave on NASDAQ the previous day. So this is the trade I took, and again they gave an opportunity for scaling in. You see, these are the things that I love. And then obviously 50 pips, we are moving away from trap volume, and 50 pips actually got hit quite quick, okay. 50 pips got hit quite quick, very quick for me, okay. As you can see, less than 15 minutes 50 pips was hit, and again the second position also took its own 50 pips in less than it was less than 6 minutes or stuff, you see. So that's how quick these trades are. And I told you, if you are opening multiple position, you can leave other position running. Just divide your lot size, okay. If you want to take a lot size of 2, divide it into 1 and open multiple, maybe 2 positions of 1 lot size. One take your profit at 50 and one can run all the way with the trend, okay. And just trail your stops as it's going up, like something when it gives you something like a pullback like this, you can just trail your stops to here, okay. Okay, as it's going, because you never know where it's gonna end, okay. So you just must be careful. For me, I love 50 pips because I also understand that it's something I do every day. For me, it's not about what happens on the day, and this is where most people get it wrong. People tell me that I'm leaving a lot on the table, and I'm not leaving a lot on the table because this is something I do every day, okay. So if I'm taking 50 pips every day, you can see that that's a massive growth on my account. I don't care if it's like it goes 150 pips, 250 pips. No, for me it's the process. For me it's something I do every day, okay. Because some days you're gonna be targeting many pips simply because the previous day it went many pips, and you're just not gonna get it, okay. I'll show you quite quick in the next example that I'm gonna show you that happened yesterday, okay. I'm gonna show you why I always target 50 pips, and I like it because the people who told me recently that I'm too disciplined when I posted my results. It's simply because I know that for me it's a daily thing. So even if I take a loss today, I'm not worried because there's still tomorrow, okay. It's just a matter of being disciplined, okay. So you see they gave 2 opportunities, and this was the cleanest one yesterday, okay. On what on Yes, on USD. I also took NASDAQ. I'll show you. And let's go to S&P yesterday. Obviously the first step will be to go to a 5-minute chart and identify trap volume. This one was so clean because you can see the session is opening here. Who is trapped? Everybody who went down is trapped, okay. And I told you they trap on the closing price, which makes things more easier, okay. So now we're gonna go to a 1-minute time frame to see what happened, okay. And remember, for me, I'm looking at these things at the same time, okay, at the same time. So one thing you'll realize here is they didn't give something like a very clean pattern, okay. Look at this, okay, look at this. It wasn't like a very clean right angle triangle, okay. It wasn't very clean, okay. It wasn't very clean. You see, this one wasn't very clean, but it was a right angle triangle, and eventually this is where they broke out of it, okay. This is where they broke out of it, okay. It is a right angle triangle. As you can see, they broke out of it, and this is the candle that actually broke out of it, okay. And you see it went down beyond 50 pips. As you can see, it went down beyond 50 pips, okay. It went down into trap volume. I told you, if you are taking a trade into trap volume, you want to be aware because most of the days they are not going to release them. What did they do? They didn't go down enough to release them. However, I told you 50 pips is nothing. We're going to get paid despite. And then after that, they just trended up and up and up and up until maybe later when they gave another like double top, triple top. It's all up to you what you see, okay. They just kept going up and up, and it's like a head on shoulder, head. The head is higher, and then another shoulder, and of course it breaks out with an engulfing candle, what we are always looking for, and then boom, okay, 50 pips given, okay. So you can see why we love chart patterns, okay, because we don't know what they are actually doing. And again, head and shoulders obviously look like right angle triangle, okay. You can see it is a head and shoulder because this is a shoulder. Sorry guys for my voice. I told you my voice is not okay, but yeah, okay, it's okay. You see, this is a shoulder and this is the head. The head is higher, And of course we have a variation of head and shoulders. That's why even on your playbook I tried to put as many patterns as I could. Okay, so I believe you all have it and you know these things. Okay, and the playbook is in the description for those who need it, but again I have multiple videos here. Okay, so everything you need is already there. That's where they broke out with an engulfing candle, and boom, they went to our 50 pips, okay, with this pin, and we were kicked out, and then they started reversing. That's why I love 50 pips. And people will tell me I'm too disciplined. No, I'm not too disciplined. You see, they gave a beautiful pattern, broke out, and they gave 50 pips. They gave another 50 pips. So guys, one thing I want to tell you is that when you are trading, one thing you should be aware of every time is the fact that it doesn't mean that because this move was too big it was for you. No, if you have a setup for it, then it's for you. But if you don't have a setup for it, then it's not for you. For me, I need patterns. Then I need to punish those who are trapped. Okay, as you can see. Okay, but I didn't take this one yesterday. I took NASDAQ and US30. Okay, and I want to show you why I took NASDAQ. If we go to a 5-minute time frame again, it's the same thing as on what, on S&P 500. When the session is opening right here, who is trapped? Everybody down here is trapped. Everybody who went down is literally trapped. So everybody down here is trapped. Okay, so let's go to a 1-minute time frame to wait for the session to open. Once you have identified trap volume, I told you we do this roughly 5 to 10 minutes before the session opens. And then of course let's come here. You see here, what did they give? What did they give? Oh god, this is a right angle triangle. And even for those who understand head and shoulders, because right angles, triangles, and head and shoulders go hand in hand most of the time. Okay, so you see, this is a shoulder, this is a shoulder, and this is the head. Okay, so guys, this is the easiest form of trading. Wait for chart patterns. You see, on S&P 500 I didn't get this big move, okay, because I don't care about the size of the move. Okay, I don't care about the size of the move. For me, it's the quality of the trade. Do I have a chart pattern? Did they break out of that chart pattern in a visible way? Guys, I know most people can't see this, but it can't. If you go to your charts honestly and you give yourself time to focus and have that laser focus, and you are checking what's happening during the session, you are drawing your lines for a chart pattern. Guys, this thing is there. Okay, this thing is there. Just make sure you have a pattern and they break out of that pattern, then you execute. It doesn't matter. Sometimes you can take a loss, it's okay. Okay, you see, they gave beyond 60. Guys, these things are there every day. These things are there every single day. They are there every single day. Head and shoulder, right angle, easy to identify. Easy kind of a trade. They break out with what? With an engulfing candle. You wait for it to close. There are people who actually have a tendency of saying, oh, now this is gonna close as an engulfing candle. No, it's not an engulfing candle until it closes, because charts have this behavior whereby right before okay, let's say you are looking at a 1-minute candle. When there's 15 seconds left, when there's 10 seconds left, they can just pull back and close this as a pin, and you took it because you thought it was going to be an engulfing candle. To your surprise, now it's a pin, and what they keep trapping all their reverse, and you lost, and you're going to come and complain and say you lost. You lost because you didn't wait for the candle to close. You lost because you chased the first candle. You lost because of this and that and that. And when you give yourself more time on this, that's when you'll start realizing that this is easy. It happens almost every day. If it's not there, if you don't have a chart pattern, don't take it. Don't simply chase moves. Don't chase move. I don't chase moves. I wasn't on this big move, okay, because I don't care about it. I don't have a pattern for it, okay. This should tell you something. Okay, now I'm coming to this. As you can see, this is a head and shoulder. This is a head and shoulder. The patterns sometimes begin before the session and completes in the session. The most important thing is the session must open first. Okay, the session must open first. If you look at the time, it's gonna be printed down here. My broker is behind in 2 hours. This is saying 13:30. Okay, and this is simply because this is 3:30 South African time and it's 9:30 US time. The session must open. Once the session is open, do you have a chart pattern? Did it start before? If it started before and it just completes at the beginning, that's your trade. I took this one, okay? They closed here. This is the candle that closed. This is the candle that I took. Why? Because this is an evidence candle. Everybody who fell for the move up here is literally trapped. Yes, they did pin back, but it's not a problem because as you can see, this candle over here, it's quite small. If I'm, you see, my stop loss is still a little bit tight. 16 pips. They didn't even come for me. They did do this, okay? And they eventually broke to the downside, okay? They broke to the downside and delivered 50 pips very quick in about 9 minutes. And I know that most of the time the quick trades are gonna be stop hands. But remember, even if it's the stop hunt, 50 pips is nothing on indices, and indices can roughly stop hunt 100 pips. If you look at gold yesterday, gold did give a stop hunt before the session began, but that stop hunt went 100 plus pips. Okay, it was still a stop hunt, okay, because they were sending people into the wrong direction, and it was the quickest move. Remember, I'm after the quickest move. That's why I said explosive, explosive, explosive. So even when they went back here, I don't have a pattern. I don't care about the move because I don't have a pattern. If I'm just gonna take this one, I don't have a setup for this. Okay, so yes, of course they started going up and up and up and all the way up, but they didn't give me a setup, so I wasn't on this move. Hence I told you 50 pips. For those who are saying you are greedy, you are taking 50 pips every day. You are not greedy. You know that there are days when you're not going to get more, okay? And besides, now we are trading into trap volume. We must be aware. And for me, 50 pips, since we had enough space for 50 pips, okay? Because this went beyond 50 pips. We have enough space for 50 pips. Beautiful pattern given. I don't care. I'm not worried about this, okay? Because I'm going to get my 50 pips. So, guys, in a nutshell, you see how easy this is. You just have to discipline yourself, okay? Start putting in more work. Start practicing. Go back and back test. Put enough work to understand this, okay? So, honestly, this is not rocket science. This is very easy. You have the same criteria each and every day. And guys, just keep it simple, okay? Throughout the day, you were free. You only came 10 minutes before to identify trade volume. You got your trade in roughly, let's see how long it took to hit 50 pips. It took for me yesterday, yeah, roughly 8 9 minutes, okay? So imagine you came 10 minutes before, you got your trade quite quick, and you got paid. You are done for the day. You are done for the day. For me, yes, I took two because I am looking at them at the same time, and I did see that they were giving beautiful patterns. But again, it's about taking the easiest pattern. And of course, both of them, US30 and NASDAQ yesterday, gave beautiful patterns and easy patterns for me. But you see, you are done for the day. You are done for the day. Close your charts, continue with your day. Go do what you want to do. Go be busy with anything you want to be busy with, okay? If you want to go out, go out. If you want to sleep, go sleep. So how easy is this? How beautiful is that? Somebody has been in there on their chart the entire day, taking losses, taking wins, taking losses. At the end of the day, they're gonna close the day with worries, with anger because they lost. You just came few minutes, you took what you are looking for. When you know what you are doing, that's how easy things are. Guys, I really appreciate you a lot. I appreciate you. And if you are new, hit the subscription button because this is going to help you. And my goal is actually to help you. Guys, I appreciate you. Have a beautiful day. Thank you.